Hello, everyone. So this is a topic we want to talk about. So for those who can't read Arabic, I'll translate. We're going to talk about digital assets and Sharia compliance. And I think, well, everybody's moving, but it's going to be all right. Because I think, nevertheless, it's the right place, and I even think it's the right time to talk about Sharia compliance. Because initially I should have started at 4 p.m. Now it's 3:30, and it's just after the prayer time today. So I think it's the right time to. What we want to do is to tell you that relate Web3 and digital assets with all the rules and the law of the Sharia. So once again, I think it's the right place for that, and we want to prove that it's a great opportunity for Islamic finance. So I'm Sopheap Lao. I'm actually not the CSO no more. I'm the CEO of Davensi. Nice to meet you all, guys. I mean, the room is packed, and that's good to see. So what we do basically is we provide Web3 financial services, and we do it through a centralized, decentralized aggregator finance aggregator platform. So come to our booth if you want to know more. Now for this session, we're pretty much, I'm not going to talk about the company per se, but instead, I really want to share, the reason why we're in Web3. And I think the reason why all the people around here have heard about Web3, and there's a lot more people behind Web3. It is all because we pretty much live in a crazy world. It's all due to the context of it. You've recently heard about inflation. Dreadful, right? The markets collapse, and that's not very convenient, and that doesn't sound good for everyone. Now, climate change as well. We're pretty much killing the planet in the sake of progress. So we now have shortage of resources, especially in Europe, you've heard. And now, around all that, it's all crazy. Do you think a Big Mac, for example, costs you $3.99 US dollars? No, actually it costs you your health. And do you think Netflix costs $17.99 per month? Actually it costs you your time. And what about social network? Social network costs you focus. So that's all crazy. And the reason why we're on Web3 is because we're saying no to all that. It's time to calm down a bit, because we all want to live in a socially responsible and sustainable society, right? So social sustainability means it's a conjunction of social equity, economic viability, and environmental protection. Now, you may wonder, whoa, where's this guy's going? It was about Sharia and so on. Coming back. If we want to figure out a way to get to that sustainable society, then one good perspective is to go through a PESTL analysis. So PESTL, politics, economy, social, technology, environment, and legal. All right? 6 dimensions. And I was thinking about Islam that actually covers most of the dimensions I was talking about. And I was even wondering whether Islam, in combination with Web3 as an enabler, would come to a point where we can reach a sustainable outcome. All right, you got me? I don't want you to get bored about all the analysis and everything, but it's quite boring. I don't want to go through all those slides in detail. But instead, I just want to focus on Islam, what it's all about when it comes to Islam in finance, and also want to study what Web3, after all, is all about. The core thing about Web3, and trying to figure out in which way, we can combine both and get to a point where, again, we come to a sustainable outcome in the society. I'm summarizing here, on the left, the 4 pillars of Islamic finance. And it's certainly something that is, related to the Quran, born, 7th century. But it took off like in the 60s when, the Gulf, the country in the Gulf has discovered, wealth and natural resources to, to transform them to what they are today. So the first principle in Islamic finance is actually things related to interest. So in Arabic, riba is forbidden. The second thing is, in any transaction, if we're dealing in an environment that is excessively uncertain, it's called gahara, excuse my French. So it is something that is also forbidden. So you must have a fair advantage to both of the parties in a transaction. So that's what it's all about. The third thing is about gambling, and that's related to the uncertainty we were talking about. I mean, in gambling, actually, everything is random. So it is not something that, Islam authorizes. And the fourth category is obviously is, anything that is haram, so anything that is, forbidden. Does that make sense? I mean, how many of you are Muslims? Yeah, so it makes sense, right? Makes sense? Okay. You let me know if it doesn't, but I think it makes sense. Yeah. Now, the scope of Islamic finance, as you can see on the right, can be broken down into 6 parts. So first part is banking, as we know it, and we even have a bank called the Islamic Bank here in Dubai. Then securities and equity markets, that's the thing we call sukuk. That represent actually 95% of the asset values being managed. And the rest of it, I mean, is still not so important right now, but I mean, in terms of process, it is really important to mention them. We have leasing, investment funds. One thing that is interesting, and we might want to see this in a little bit more in detail, is takaful, is the insurance, because this is where, some discussion can be made, and also microfinance, of course. Now, we talked about Islam, Islamic finance. Now we're talking about Web3. So what Web3 is all about? Well, actually, Web3 is a larger area than DeFi. DeFi is really pretty much, a subsector of Web3. Now, they both have in common 7 principles. One is, of course, decentralized. I mean, we're talking about decentralized finance, so it's obviously decentralized. The second thing is it's permissionless and open. It means everybody can get in and can participate. So there would be no barrier to entry, basically. Now, we also see that in Web3, everything is interoperable. It means if you combine loan protocols and trading protocols, you can come up with margin trading if you want, right? So that's a very good example of how services are interoperable in DeFi and Web3. The fourth principle is really important, and I made a speech about it like a couple of days ago, about the fact that it's non-custodial. Non-custodial means that nobody will own your assets. You're the only owner of your own assets, but it takes some responsibility. But nevertheless, you can be sure that the assets you want to put somewhere that belongs to you, nobody will own it. The fifth principle is programmable, and that's a very interesting part. Programmable means, you can create rules that will suit regulatory framework or even religious framework. And we'll see how it will adapt. This will be a key point where Islamic finance can be adapted. The sixth principle is immutability. It means that everything being in a blockchain, everything is cryptographically verifiable. So in a way, you can say it's non-reputable. You can't say you haven't done this because it's put in a blockchain and nobody could change it. Now, the last principle, and that's very important, we're talking about tokenization. And it's pretty much a token-based economy, which also involves a system of governance that also suits the nature of the token you wanna create, and also the governance and the regulations that is in place in any country in the world. Now, I really want to focus on some categories of DeFi apps. I mean, there's a lot, and there would be a lot coming, of course, but I want to focus on those 4. So first is decentralized exchange. Decentralized exchange is a natural thing we're going to talk about because, well, Davensi, I mean, we started as an exchange, a centralized one for now, but moving towards decentralized exchanges. The second category of apps I want to talk about is lending, borrowing, and staking, which is all the same thing. And this is something they have in common, is they actually have something to do with interest. Okay? Would be very interesting to see how we adapt those apps to the Islamic finance. Then synthetic assets, that's related to the capability of Web3 to tokenize pretty much everything. So synthesized asset is actually, tokenized representation of derivatives. Now, talking about NFT, which is something everybody has heard about, non-fungible tokens. Now, if we want to put the perspective of the development for both Islamic finance and Web3, you can see the parallel. I mean, they have in common, Islamic finance and Web3, they both have in common a formidable development in recent developments for both of it. It's impressive growth you can see, right? So, and that's been like 2 decades ago. Islamic finance was just 200 billion US dollars overall. And it turned into 1.8 trillion US dollars, 10 years after. So it's a massive growth. And when you think 1.8 trillion only represent 1% of the global assets, the financial assets globally. Now, talking just about sukuk, equity and everything, that part actually underwent for a growth that is 20 times what it was in 2003. From 2003 to 2013, so 10 years, only in 10 years, it was 20 times. So you can see the numbers. $6 billion US dollars in 2003 and 120 in 2013. Now, this is expected to be a staggering 3.8 trillion in 2030, right? Now, Web3 is a nascent industry. So for this year, it is expected to be, the size of the market is expected to be 6.2 billion US dollars. Now, in 2013, it will be expected to be over 30 billion US dollars. 80 billion dollars, which is actually 13 times what it is today. Now, can you imagine if Islamic finance were to overtake Web3? I mean, how much wealth it could create? And I think there's a lot of things that Islamic finance can prosper, with Web3. And this is what we're trying to figure out by giving you some hints and some example shortly. In a way, coming down to the craziness we were in and we're still in, and mentioning the fact that we all want to live in a sustainable world, taking a look at Islamic finance will actually lead you to think it's a form of sustainable finance would have more stable outcome. I mean, what if Islamic finance will lead to a world that is more stable? All right, and you take a look at those, three areas where I investigated. I can talk about it, for hours, but go for the basic financial arrangement. So the main principle is actually that profit and loss are shared. So you bear the risk, and the contract is all about profit and loss sharing. So it's not about someone who is going to eat the other one, etc. Right? So there's even an Arabic word for it, is mudaraba. Core principle for Islamic finance. Now, the second core principle is what we call declining balance shared equity and lease to own. It means you can literally co-own an asset if you were to make a loan in order to buy it. It means at the start of your investment, it would mean that the bank, for example, would own part of the asset over time. And the thing is, you will actually gain ownership of the property over time as well, which is fair. It's not like, in a regular finance world where the property is actually, given to the one who, the borrower, basically. Well, in the Islamic world, it's allowed to be co-owner of an asset, which will be, and the ownership could change over time to the benefits of the borrower. Now, installment sales is also something related to what I've just said. The same way as you can, install the reimbursement of your lending, you can do the same with sales. It is authorized in Sharia to have installment sales. So it means you will pay what you bought progressively over time. Leasing, ijara. Leasing is actually core in Islamic finance, and I even experienced it. I've just been settled in Dubai like a month ago, and I could see that everything is even paid in advance. Let's say, okay. So I was surprised that you had to pretty much pay for everything before you get it, like a rent. You probably would want to pay like a 6 month or even a year in advance before the property can be leased to you. And that's related to the last item, which is what we call Islamic forward. It means that there are situations where an item or an asset can't be just delivered right now, but can be paid right now in advance before it's delivered. Properties, for example, under building. So what I'm saying is financial arrangements here, those are not only principles, but all those are the things that are allowed by Sharia. Okay. Interesting thing about investment vehicles. So equities, for example. Equities, you can, it's allowed by the Islamic finance, Islamic law. But it's only when the underlying activity of the company is not related to something that is haram. You can't, a casino or a strip club, not allowed. Everything should make sense, to the people, and should be beneficiary to the society. So that's the main principle. So everything should be educational, should be inspirational, motivational even. And even spiritual. Those things are allowed by Islam. Fixed income, that's an interesting thing. That's one of the favorite investment vehicles in the Islamic world. And this is something that you can obviously relate to interest, but actually the way it's done, it's not something we can qualify it as interest. It's more related to profit that is shared between the parties instead. Okay. So I can give an example of an equity bond equivalent, where a certificate is actually sold to an investor group, and in turn, the investor group will just rent it to some parties. So eventually, the profit that is made out of it is actually shared by the parties, and this is all right in Islam. And I was talking about insurance earlier, takaful, and I said we would want to be more in detail, in that part, because basically, if you think about the principle of an insurance, it could be considered as haram, but we need insurance anyway. So how Islamic finance is handling it? So basically, you can read it. Traditional insurance is not permitted. It is because you're in a situation of high uncertainty. Remember? You can't do that. So insurance basically is a service you're paying for something that probably would never happen, right? So that's a high level of uncertainty. So it should be forbidden in Islam. But we need to have those insurance, of course. So how it is? How we can circumvent this trap? Well, actually, there's one. I'm going to talk about a very good alternative that I had in mind. To be Sharia compliant, you can imagine cooperative or mutual insurance. It means that you can imagine a fund where all the beneficiaries, the subscriber, will put some money there. So it's really related to like kind of social security thing. So everybody would put money in that pool, and then if something happens to anybody, any of the subscribers, then the money is just pulled out of this pool to refund or pay all the damages due to the subscriber. Okay, so what I think is it's something that is very common in Islamic finance, and this will actually circumvent and avoid the the traditional, the trap that traditional insurance will actually fall. Now, with Sharia compliance, you can see, so not everything is authorized. I mean, it's codified. Everything is in the law. You really need to read what is allowed, what is not allowed. So remember the two things we're talking about. So I'm trying to, in this slide, I'm trying to bridge Web3 DeFi apps, decentralized exchanges, lending, borrowing, and staking, synthetic assets, and non-fungible tokens, to the Sharia non-compliance. You remember the 4 themes I was talking about? And obviously, if you take a look at the decentralized exchanges part, which is actually full of interest in some contract, it is you're dealing with trading. And those who are trading in crypto, know about it. It's excessively uncertain. I mean, who can predict Bitcoin's price tomorrow? That's hard, right? So it's excessively uncertain. And an exchange, I mean, per se, decentralized or even centralized, can be actually referred to gambling, because it's almost random sometimes, right? Especially with the altcoins. And is it something good for the society? Is it haram? Well, actually, in China, one of the reasons why they banned Bitcoin, for example, I mean, that's the official reason, is because they say it actually turned people nuts. Like, they have like strange behaviors from teenagers. Some people are even throw themselves out of the windows. That's crazy, right? So they actually said that crypto is bad for the society. So in the same way, we can discuss about things behind what is an exchange and everything. But I mean, you can prove that exchanges are bad for the society. It is actually the DeFi app that is more in risk as compared to others. Now, when it comes to lending, borrowing, and staking, there are interests behind the scenes. So it is just that we have to avoid those smart contracts with interest. Excessive uncertainty. This is where it's all right, because the outcome of it. You lend. I mean, you have like pre-agreed terms that will give you more money over time, and the money, I mean, you earn on top of the initial capital can be considered as just profit, not interest. Gambling, we can talk about it as well, etc., etc. So you see, from those Web3 DeFi app standpoint, decentralized exchange is being the worst. It means that we need to make a lot of effort in order to comply with Sharia. Whereas on the other hand, NFTs are the ones that is the most compliant, because there's no interest. I mean, you get what you see. It's not so much about gambling, unless you buy something that you wanna sell with profit later on. But most of the time, it's more related to art. So most of the time, you buy something because you fancy it. Is it harmful? Well, it is just like it's art. So how could it be harmful to the society, after all? Unless we're dealing with porn, etc., etc. But that's what we have to pay attention to. But this is something that is easily controllable. Now, I don't have time left, but I really want to go for a very good example and a precise example of how Sharia compliant would be implemented with within finance. And I wanted to give an example of Metaverse. You see, Metaverse is something we all talk about, in Dubai especially. They have a very, they even have a strategy, which is amazing. But the five items you can see, utility and benefits, of course, is something that it's really something, core in the Sharia Compliance. It means we need to have a utility and a benefits. Otherwise, if it is useless, just for amusement, then you won't be able to do that in real life, like in the Metaverse. The second thing is real versus virtual. Means that, even in a virtual world, you cannot take away obligations from the people in a real world. It means prior time, for example. That shouldn't be, if you create something that will, oblige people to stay in a virtual world and not doing their obligation in a real world, then that's not good. Representations, part of the bodies that can't be exposed, limbs, for example, even representation of Allah or the prophets. I mean, you can't do that. So pay attention if you want to run a Metaverse thing, and if you want to be Sharia compliant. Experiences, and earlier I was talking about things related to strip club. I mean, as of in real life, I mean, strip club or porn is not allowed in the virtual world. So don't do that if you were to do something in the Dubai Metaverse. Trading as well. Like I said, trading, you saw that. It's all about randomness and everything, uncertainty. So it's not something we want to do. So now, hopefully, I mean, you got it. The reason why Islamic Finance is set to be, very successful with Web3 and Metaverse and everything, and especially here in Dubai, where the government even have a strategy about it, it is because Web3 is a big and great opportunity for Islamic Finance to shine, basically. So hopefully you are convinced about it, and I thank you very much for your attention.